The following hedge fund video has been brought to you by the HFG. The hedge fund group provides premium service, along with online training and certification for hedge funds, called the Certified Hedge Fund Professional, also known as the CHP designation.
Hello, this is Richard Wilson, and welcome to this short video on hedge fund training. It's just going to be about one topic, one term called a hurdle rate. And you might have heard of hurdle rates in the news, in a hedge fund manager's marketing materials, in one of the books you're reading for the CHP designation. And the hurdle rate is really a set performance figure that must be achieved before any performance fee can be calculated and paid to a hedge fund manager. So if we back up one step, most hedge fund managers charge a management fee, and they charge a performance fee. Typically the management fee is 2% and the performance fee is 20%. What this is saying is that, for example, if an institutional investor is looking at investing in a hedge fund and they know that inflation is 3.2%, and they go to the hedge fund manager and the hedge fund manager is saying, well, we're going to charge 20% for any performance. Well, in the institutional investor's mind, he can get something that can give him a inflation rate return at little or no risk. And so the hedge fund manager wants to be able to say, okay, we won't charge you our performance fee until we beat that 3.2% inflation benchmark. So until we beat inflation, we won't consider it performance or outperformance, and we won't charge you that fee. And so a hurdle rate is something that was kind of invented to take out that objection to investing in hedge funds. So they're going to charge you for all of this performance, which really isn't outperformance. If you're charging these high fees, we want something that's above and beyond what we can get for less fees and less risk elsewhere. And so that is really why the hurdle rate exists. And you'll see that over 95% of hedge fund managers that our firm has interacted with, and the 1,000 managers that we've seen, people have hurdle rates in place, especially small to mid-sized hedge funds which are hungry to grow capital. It just makes sense to have it in place, and it kind of makes the deal on both sides a little bit more fair. So there's a short definition and explanation of hurdle rate, why it exists, why it's in place. If you have any more hedge fund questions, please feel free to send them to us, and thank you for your time today.